and gentlemen, welcome back to the channel. We have some news that changes everything for the stock market, okay? This is news that you critically need to know before Monday. So we're going to get into that here in this video, especially because there was a lot of hedging, a lot of shorting, a lot of repositioning, if you will, on Friday ahead of the Trump-Putin meeting. And no, we all know the Trump-Putin meeting went well, but it's what Trump said about China that is actually the big news today. So we're going to get into that here in this video. Ladies and gentlemen, we're also going to share a clip with you from Tom Lee and discuss some of the internals of this market, okay? Things don't exactly look great from a sentiment perspective, but that's actually exactly what you want to see for this bull market to continue higher. And yes, it sounds paradoxical, and it kind of is, but it works like a charm. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video to come join hands down the best trading community in the world. What we're doing over there is going out, finding small cap stocks with exponential value that Wall Street is not appreciating yet. I think this happens a lot of the time because if retail investors don't know about a stock, then a lot of the time institutions don't really know about the stock. And this company that I just put $80,000 into, I'm just gonna get really quiet here. Oh my gosh, this stock, in my view, there's almost no way that the company fails. Obviously, I'm not a financial advisor, I'm not a financial planner. I'm very excited about this company in particular. I think this is one of those change your life kind of stocks. I know, like, I invested in IONQ at $7. Today it's like 40 or 50. Amazon's now buying this stock. I invested in Novartis Semiconductors, okay, at like $1.50, $2. The stock's like $8, $9 today. Invested in Nebius when they got relisted on the markets back in November at like $20. The stock hit 70 recently, okay. Applied Digital bought that stock in the $2, $3 range. Today it's like $14 or $15. All of this within the last 12 months. Like, the trading community portfolio is up like almost 80% year to date, even after some of the weakness we've had in the last couple of weeks in the small cap arena. Like, we're still in the top 1% of hedge funds and institutions, and I think that's going to really accelerate top 1% as far as returns year to date. And I think that's really going to accelerate into the end of this year and explode into 2026. Again, I'm not a financial advisor. I have a great track record at this stuff, okay? Finding value in main themes. You know, right now it's AI. That's where the value is. That's where the opportunity is. In 2019, it was small caps and biopharmas. In 2017, 2018, it was cannabis. You know, EVs in 2020, 2021, okay? There's different themes for different times. This time, it's all about AI. And it is going to be around for the next 10, 20, 30 years as the main theme in markets. Sometimes, in some periods, it's going to be small cap AI. Other periods, it's going to be software. Other periods, it's going to be analytics and data processing. Other periods, it's going to be AI healthcare, okay? Semiconductors are probably going to have another wave. Robotics are going to have a wave, okay? Quantum computing might have another wave, okay? There's going to be a lot of layers to this. Being early and being first is where the money will be made. And that is what we are doing in the trading community. Link down below in the description of this video. Again, read disclaimers. Anything can happen. A depression could happen. You could lose all your money if you don't understand what you're investing in. That's obviously a bad strategy. And before we get into this big news, why not start off with about a 3-minute long clip from Tom Lee and why he thinks the internals of this market look pretty good and stocks will continue higher. Take a listen.
Let's to our talk of the tape, this record-setting run for stocks and how dependent it now is on the Fed cutting interest rates this fall. Let's ask Tom Strat's head of research, also the BitMine chairman. He's here with us at Post 9. It's good to see you.
Great to see you, Scott.
So how about that question? I mean, it's on a couple of fronts. Like, we came in to this week, which you said was going to be the start of a pretty good rally, which it kind of looked like it was. Now what?
I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation is soaring. There are some things to sort of cut out of that number.
Sure, I agree, and people have said that throughout much of the day, but it seems to have changed the conversation, if nothing else, about the amount of rate cut we might get in September. Is that fair?
Yes, it's very fair. That is correct. But if, as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well, what if they don't do anything? I mean, Steve Leisman, who's going to join us in a minute, made the argument earlier today that this changes the conversation from 25 or 50 to 25 or nothing. What happens if we go on the side of nothing? Can this market stand up under that?
Yes. I mean, because number one, and I'm sure Steve's going to talk about this, that the economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move.
Well, it could be a hawkish cut. And Leisman's thrown out that too, right? If they cut 25 and leave us with the feeling like, all right, you got your little lollipop here, everybody, and now we're going to wait and see.
Yeah. I think the market reaction, of course, is really how people are positioned. And we, at Fundstrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers.
Now, in the news today, Finland's Stubb may accompany Zelensky to DC on Monday. Now, Finland and Sweden are some of those countries that have, I believe, now officially entered NATO, but are right on the doorstep of Russia, that were very nervous, for a long time, that they could be the next targets for Russian aggression. Trump says that Xi told him China will not invade Taiwan while he's the U.S. president, per the New York Post. Canada's Prime Minister Carney says Canada is working with Zelensky and partners on peace. And just wait, there is huge news coming in a moment, but I want to do this in order of operations from what is newest to what is oldest that we have not yet covered here on this channel. Now, India-US trade discussions are now postponed from the August 25th meeting that was supposed to take place in New Delhi. West Virginia's governor is sending 300 to 400 Guard members to D.C. And National Guard soldiers prepare to carry weapons in Washington, D.C. And in a typical Canadian move, the Canadian government has shut down the Air Canada flight attendant strike less than 12 hours after it began. Besant says that Chinese exporters are likely to accept lower prices as U.S. importers negotiate over who pays the tariff. Putin reportedly told Trump that he would relax some of Russia's territorial claims in exchange for Ukraine's Donetsk region. Now, this is not the big news that we're going to get into here in just a moment, but as we went into this meeting, again, I've talked about this on the channel a couple of times. On Friday, there was a lot of shorting, there was a lot of nervousness, a lot of hedging of portfolios, because what if Trump and Putin did not get along? Well, if they did not get along, then Trump openly said he was going to put tariffs on China. He was going to put tariffs on other countries for buying Russian oil. Okay, that was the big risk. That risk is gone now, okay? Whether Zelensky wants to end the war or agrees to these terms or not, it doesn't really matter at this point, okay? Because Trump and Putin are seeing eye to eye. That's all that matters from a market's perspective, no matter what your opinions are or what my opinions are. Now, Putin talked with Trump on resolving Ukraine crisis on a fair basis. Putin would like to move on to resolving issues peacefully. Putin says the Alaska visit was timely and quite useful. Putin says the discussion with Trump was sincere and substantive. Trump told Zelensky that Putin offered to freeze front lines elsewhere if Ukraine withdraws fully from eastern Donetsk and Luhansk regions as part of a deal. And European leaders are invited to come along with Zelensky to DC, according to the New York Times. Zelensky predicts Russian army to escalate pressure in the upcoming days. Now, here's kind of a rundown of some of the most important points, okay? Trump's take. He says meeting with Putin was a 10, but a deal is not finalized. He says negotiated on NATO security and land. Says only 1 or 2 significant items remain unsolved. Stresses Europe must be involved, and Ukraine and Zelensky must ultimately decide. Advise Zelensky to, quote, make a deal. Hints at arranging a Zelensky-Putin meeting, possibly including himself. And he announced Zelensky will visit Washington on Monday. Zelensky says that he had a 90-minute call with Trump, and Ukraine is ready for constructive cooperation, supports trilateral talks, and stresses Europe's involvement at all stages, traveling to Washington Monday for further talks, and notes positive signals from U.S. on security guarantees. Basically, Ukraine's going to get like a security guarantee that is like Article 5 of NATO, but without Ukraine being in NATO. Like, hey, Russia, okay, we're stopping the conflict, but if you attack Ukraine again, we're going to be involved. NATO's going to be involved. But Ukraine's not in NATO, okay? Something like that. European leaders say it's up to Ukraine to make decisions on territory. This is the big news. This is what Wall Street is really going to love on Monday, because this is what was negatively affecting stocks on Friday. Trump says, quote, because of what happened today, I don't think I have to think of possible increases in tariffs on China. It's over. GG's. No more tariffs on China because of the Russian war. I've literally talked about this for a month now. I said, hey, we're heading into a seasonally weak period. I don't know what's going to cause the weakness in markets. From my perspective, we just got through earnings. I'm sure Nvidia earnings are going to be pretty good, as atypical, okay? Stocks generally don't go down for no reason, okay? I don't see us really getting backpedaled in trade negotiations with Europe or China at this point. The bad news is kind of came, and we've, digested that. I don't think the economy is going to dramatically weaken between now and the end of this year, right? Where's the negative catalyst going to come from? I've talked about this for a month now. It could come if the Ukraine war did not come to an end and there was additional tariffs put on China. That is the biggest risk, I think, at this point, that is now gone. Gone, okay? Could it come back up if something were to go sideways? Possibly, but again, it doesn't matter if the war doesn't end. It only matters as long as Trump and Putin get along. And I think Trump thinks Putin's demands here are reasonable. Do I think it's reasonable? Do you think it's reasonable? Who gives a shit? Okay, nobody cares. Does Trump think Putin's demands are reasonable? And at this point, from what I can tell, that's a yeah. Trump says if all goes smoothly, we'll plan a meeting with Putin. Trump says we'll meet with Putin again if Zelensky meeting goes well. Trump says best way to end Russia-Ukraine war is a peace agreement. And Trump says meeting with Vladimir Putin went very well. Trump told Zelensky and NATO leaders that Putin doesn't want a ceasefire and prefers a comprehensive agreement to end the war. Axios reporter on X says. Now, we are going to have a lot of catalysts coming next week between Jackson Hole with the Fed, economic data, and more earnings. Okay, so keep that in mind. Like, this is, there's still going to be things the markets are going to react to. Specifically, Jackson Hole could actually be a big catalyst. We'll talk about that more in the next video. Do we get a shift from Powell? We've got a shift from most other Fed officials. Do we get that shift from Powell? That would obviously be big. At the time of recording this video, the odds of a September 17th cut sit at 83.4%. The odds of a pause is 16.6%. For October, the odds of another cut at 48%. The odds of a pause at about 45%, or only one cut by October at about 45%. And for December, you're pricing in 2 cuts firmly, 45.8% odds here. And then 3 cuts priced in at 34%. All of your economic data, inflation, data on the economy is going to move these rate cut expectations between now and September, and really for the October and December meetings as well. With that said, you have a lot of bears. People are bearish. People are all bared up right now in a way that you wouldn't think if you looked at the headline indexes. People are all bared up right now. 46.2% of investors are bearish versus 29.9% that are bullish. You almost have like double the amount of bears, okay? Neutral investors at 24%. This is sharply different than what you had, even last week, where 35% of investors were bullish, and now only 30% are bullish, okay? This is the lowest numbers you've seen in months, okay? The highest number of bears you've seen in months. Back July 30th, 33% of investors were bearish. Today, 46.2%, okay? So you're up a lot on the bear side in a relatively short amount of time. Neutral investors have stayed in this mid 20% category, and bulls have been in the high 30% range on average the last couple of weeks. So now you're even less than 30%. There's a lot of a wall of worry, if you will, to climb. And I think that could continue to fuel this market moving higher. The CNN Fear and Greed Index at 64 today, which is almost midpoint of greed. Market momentum is greed. Stock price strength is greed. Stock price breadth is neutral. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand in greed. And junk bond demand in greed. I think what's really happened in the last couple of weeks specifically is big tech has gotten most of the capital going into it. Like this market has narrowed out a bit in the last couple of weeks. You were seeing a broader rally from those April lows that kind of stopped around mid-June, late June. The broader rally kind of ended, okay? And it's been a lot of your Mag 7 that has really led this market higher. I think between now and the end of this year, could Mag 7 go up further? Yes, but I think the outperformance is really going to come from those small caps, those industrials, those areas that were not participating in the last month and a half or so, the last 5 or 6 weeks or so, okay? Now, the percent of stocks trading above their 50-day moving average at 56.6%. So, again, you've come down from that almost 80% level you were at in early June. Again, as we just talked about, the broadening has kind of slowed down a bit. And now you're down to 56.5%, which is really like midpoint of the last 5 years. Like, you are not stretched at all by that metric. And this is literally, think about this slowly, percent of stocks above their 50-day moving average. Your 50-day moving average is very short term. So if you only have roughly half of stocks above a very short term moving average, that's not telling you like things are great out there. Okay, so worth mentioning. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the hands down best trading community in the entire world. We're going out, we're finding small cap stocks with excessive value that are overlooked by Wall Street, companies with great balance sheets, high insider ownership, meaning their profits are aligned with yours, right? If you do well, they do well. If they do well, you do well, right? You always want to see that with very little institutional ownership, not really any retail backers, okay? These are all green flags to me, because if retail doesn't know about a stock, well, they can't get bearish on a stock. Like, they don't know about it. The odds are the company continues to do better and better, and people catch on to the opportunity. We're just getting there first. I did this with IONQ. I bought that stock at $7. Today it's in like $40, $50. Now Amazon's buying that stock, okay? Applied Digital bought that in the $2, $3 range. Now it's like $15, okay? Bought Nebius when they relisted again. The Russian Google, everyone was overlooking that stock. No institutional investor ownership at all when they relisted. Bought that stock in the 20s. It went up to like $70 here recently. Okay, Novartis Semiconductor. Everyone was, counting out the GAC semiconductors, and they had a partnership with NVIDIA. Obviously, missed opportunity from a lot of investors. I bought that stock at $2. It went up to like $8 or $9. Okay. There's many testimonials here, but I think the best opportunities are some of the ones that we are investing in right now. I put $80,000 into one stock I think is going to make over $1.5 million, probably a 20x, 15x over the next 12, 24 months. Check it out. Link down below in the description of this video if you have not done so already. I talk a big game and I can back it up with the results, okay, with the returns so far. Anything can happen. I'm not a financial advisor. Stocks could crash, depressions could come, blah, blah, blah. So keep that in mind and always come to your own conclusions. Have a great weekend, and I will see you in the next one.